Quick question. Who wants to guess on how many condo sales there's been in the Pinellas County area year to date? We'll get 3 guesses. How many condo sales in Pinellas County year to date?
I think it's 65,600.
That's a big number. I would like that. But you were one digit off. So 6,000. There's over 6,200 condo sales. Yeah.
To be honest, I know it was a 6 something.
Yeah, so over 6,000. That's a lot of condo sales, right? So for a lot of us, right, if you could just help a couple more people in that regard, or maybe if you have a project approved through your condo team and you can now farm that area, that would be a big value add. So Sam, first question for you. Many lenders run away from condos, but Movement doesn't. Can you share why?
We actually embraced the condo space because 7 years ago, we obtained approvals by both Fannie and Freddie to actually approve condo projects in-house. So we don't have to rely on third-party consultants or other firms to approve projects. We now have that ability. And over the last several years, Fannie and Freddie has made condo financing so much easier. They've really relaxed the guidelines. And in the last 12 months, there's some major guidelines that they've relaxed. And our team is able to approve a condo project for conventional financing, usually within 24 to 48 hours of receipt of the condo questionnaire, budget, and insurance.
It's just lightning fast, right? So a lot of times what happens is a buyer goes under contract and it might take them 2 to 3 weeks, 4 weeks to get a condo approved. But again, it's focused on getting all the right information up front, which we'll share more on our team and how we can do that, and then let's say a 48-hour time frame. FHA is similarly as fast. We'll share more, and we'll share more of the VA time frames as we go as well. So since Movement created our condo department, how many projects have been approved?
Over the last 7 years, my team and I have approved over 15,000 condo projects for Fannie and Mae financing nationwide. And here in Florida, we've approved close to 2,000 projects internally. Now, when you think about how many condos you have in Florida and across the country, that number may not seem like a big number. But what's really important about that number is the majority of the projects that we approved were for buyers before they had executed contracts. So they knew going into the transaction that that project was not going to be denied because of an issue with the questionnaire, budget, or insurance.
Thank you. So one of the thoughts or the takeaways from that is before you're showing a buyer, or as soon as possible, reach out to us and let us dive into it and see if what financing is available on the condo project. And then on your listings, right, make sure you know this up front, what financing is available. Next, there are several different types of condos. Can you elaborate on each type of condo?
Yes, in most markets, condos come in all different shapes and sizes. And it's really kind of hard to look at a property and state that this is a condo or not. We actually have single-family homes that look like homes that are in planned unit developments or outside of a planned unit development that can be created under the condominium form of ownership as a site condo. And if your borrower is a veteran or looking for FHA financing and the property turns out to be a site condo, you can run into an issue. Where it really becomes confusing is when we talk about townhomes and row homes. And especially here in Florida, because when you look at the Florida Association of Realtors data, they combine townhomes along with condos, where townhomes is actually a style of property and condominium is a legal form of ownership. Townhomes could be created as either a planned unit development or as a condo. If it turns out that it was created as a planned unit development, no review is required. That's fine. We handle it as if it was a straight single-family home. But if it turns out to be a condo, then we need to drill down on the questionnaire to see if there's any ineligible characteristics, if the budget is sufficient, it has reserves, low dues delinquencies, and it's properly insured.
So last night we had a couple of questions come up about manufactured homes that are condos. Has anyone encountered that? So if you hear of anything, or Sam, you want to share a little bit on that?
Yeah, that's the third category in Florida. Florida lists single-family homes, condos townhomes, and manufactured homes. We can easily do modular homes that are condominiums, but when you come to manufactured homes, there are special requirements that are required for those, so we will do those on an exception-only basis.
So just like humans, right? They come in all shapes and sizes.
Yeah.
So with all the confusion of what a condo is, what should an agent do to confirm the property is a townhome or condo? You touched on that a little bit.
Yeah, it's pretty easy. If you're taking a listing and the seller doesn't know if the property is a condo or not, it's a townhome, and you want to clarify, just reach out to our team. Reach out to our team and give us the name of the project, give us the address of the project, and the HOA contact. And my team will do the research for you.
So the power word of the day in the condo world is warrantability, right? Is the condo project warrantable? So let's talk about warrantable. What does the term warrantable mean? And can you share more about condos that don't qualify for agency financing, such as non-warrantable condos, condotels, or maybe jumbo loans?
Absolutely. When you're not looking at cash buyers, you're looking at buyers that need financing. The key to having a successful transaction is making sure that the project is warrantable. And warrantability is just one of our big mortgage banking terms that means that it's sellable. If you're dealing with a veteran, you want to make sure that that loan could be sold to the VA. If you're dealing with an FHA buyer, whether they're a first-time buyer or putting 3.5% down, or they're a senior looking to purchase a condo as a residence for a reverse purchase, we need to make sure that that loan can be sold to HUD. If you're dealing with a buyer that's looking to buy as an owner-occupied vacation home or investor, we need to make sure that that project can be sold to Fannie or Freddie or to a jumbo investor. And warrantability just means that it's sellable. And the reason why warrantability is so important is because of what somebody is purchasing when they're purchasing a condo. When you look at a single-family home, understanding the risks are relatively easy because you know how much land they're getting, how much square footage they're getting, and what similar styles of properties they're selling for. But when somebody buys a condo, they're basically just buying the walls-in airspace of those units. So we really need to understand what the buyer is buying and to what the risks are if we're going to be lending in that property.
Yep, that's great. So the government process is a little bit more tedious as a whole than the conventional process. So can you share a little bit on FHA, VA, USDA, the process, and then the turn times?
Perfect. Okay, with conventional, we could render a decision for established projects usually in 24 to 48 hours. In the state of Florida, Florida has certain geographic restrictions, the only state in the country where on new projects, the projects must be reviewed by Fannie Mae directly. And that requires reciprocity with Freddie as well. Freddie requires that Fannie Mae project review system. And that can take a couple of weeks, and that costs money. That costs money. The fees have come way down this year. It dropped from $2,500 plus $30 per unit to a flat $1,500 this year. So the fees have come down, but there's still a cost for Fannie Mae on new projects in Florida. VA and FHA are absolutely free. There's no cost at all for a project to be approved or reviewed by VA or FHA. Did you all know that? Yeah. A lot of realtors don't know that. A lot of management companies don't know that. There's a huge misunderstanding nationwide, and I deal with all of our offices across the country. Most management companies are under the impression that it takes a lot of work and it costs a lot of money to get a project approved by VA and FHA, and that's false. The reason why they have this misconception is because there's a lot of third-party companies out there that charge thousands of dollars to provide this service when it's absolutely free. But for the most part, to answer your question regarding time, VA usually takes 2 to 4 weeks for review. FHA, if the actual agency, HUD, is approving it, can take 4 to 6 weeks. And as of October 15th, we now have the ability at Movement to approve condo projects for FHA.
So while we're on that track, can you share a little bit more about a SUA?
Yeah.
What SUA is and a shorter time frame on an FHA than 46 weeks.
Okay. SUA. Anybody here been in the business for 10 years or longer? Okay. Anybody remember the old spot approvals by FHA? Remember that term?
That nobody wanted to do?
Yeah. Nobody wanted to do.
Run.
And they were easy. What just came into effect is not spot approvals. Not spot approvals at all. What came into effect on October 15th is single unit approvals. And basically what that means is we as the lender need to get all the same docs as if we were submitting it to HUD. But our team can make the decision in-house, usually within 48 to 72 hours, which gives you a much quicker decision time. Instead of having to wait 4 to 6 weeks, we can let you know if the project is eligible within 48 to 72 hours.
On an FHA, which is extremely valuable, right? I mean, does everyone agree with that if you could find that out that fast? Go ahead.
Where I got confused on the single unit approval is because I thought that before the project was being approved as a whole, so that means that the lender was looking at the budget and the reserves for the entire community. And now it's a single unit. Does that mean that the reserves of the project is no longer taken into consideration for loan approval?
No, not at all. We require the same documents to issue a single unit approval as opposed to submitting it to HUD, which will approve the whole project. The big differences, and there's been some key changes for the regular HUD program, which we're going to talk about too, but for the single unit approval, we're reviewing the budget, the insurance, the legal docs to make sure that there's no ineligible characteristics, and then we need to make sure that there's currently less than 50% investors in the project for a single unit approval, and that the FHA saturation, that means the number of FHA units that have financing in the project are 10% or less. So we are only granting one loan for a unit in that project. And there's two parts: making sure that the project is eligible and making sure we haven't exceeded that 10% cap.
But aren't those numbers the same as before? I thought it was the same thing, like we couldn't have, there was a certain number of investors that couldn't be in the community. I don't really see.
Well, let's talk about the changes that actually occurred, okay? The changes that occurred for the regular program. First change was extending the approval period from 2 years to 3 years. Having the cap of investors stayed the same, which is 50%. So if you have 100 units in the project, you can't have more than 50 units that have FHA financing, where with SUA, you're limited to only 10 units in the project that have FHA financing. One of the big changes that occurred has to do with the number of investors. Prior to October 15th, if a project had more than 50% investor, it was ineligible for FHA financing. Projects that have been approved by HUD that are currently on the HUD list will now allow financing with investor concentrations up to 65%. Yeah, which is huge. But with SUA, they still have it capped at 50%. Another big change that happened...
Which I'll say is still a big number because FHA financing hasn't been utilized that much, right?
Exactly, and it's been at a
that could be more of a challenge a couple of years from now, but there's not a lot of FHA or VA financing going on projects, although the good news is there's a mass number of projects that are approved at this time because they've been grandfathered in for the 2-year time frame, or if they get approved again, the 3-year time frame, or VAs for the life of it. Mm-hmm. So some of these VA ones have been approved years ago, right? And now
exactly.
they're still approved, which if you can after this, if you can share. Did that answer your question? Or?
You did.
Okay.
Thanks for asking, by the way. So for everyone, please ask questions because we can dive in deeper on what's important. If you can share a little bit more on the value, we touched earlier, the number of projects, FHA and VA, that are already approved. And then we talked about the time frame. So if we have to get them approved, there's a little bit more of a time frame than a conventional. But when they are approved, how easy is it?
It's relatively easy and it's free. That's the big takeaway here. All we need to do is get the required documents. Our team will do the preliminary review and do the sponsorship to HUD. Now we said there's just under 2,600 VA approved projects, but there's only about 250 FHA approved projects. The main reason is when we get a project approved by VA, there's no expiration date. It's on the list indefinitely. However, with HUD, prior to October 15th, approvals were only good for 2 years. So if nobody went in and requested that project to be recertified or reapproved, it went on the expired list. And there's over 2,000 expired FHA projects here in Florida. These are projects that met all the legal doc requirements, budgets, and insurances, but nobody's gone in to get them recertified. So we're hoping with this new SUA program, if the FHA concentration is under 10%, this will be a quick opportunity for us to try to get these projects recertified for you. Create more affordable inventory.
Once recertified, then there's a lot of opportunity. And hopefully in time it'll continue improving. I mean, if you look back over the last 10 years, the condo financing world has been the most challenging sector, I think, in financing. And then there's been the most transition, but there's still, finally we have the evolution where it's the momentum and changes are happening. Since we're on the condo train as well, a cool thought or topic we had last night was about occupancy. Can you share a little bit on that? This is a little bit outside the condo world, but it still impacts the condo financing space.
Occupancy, that's huge, okay? How many realtors here have been told you have a problem or you can't get financing in a project if you have a high percentage of investors? See all those hands, right. Where do investors usually start getting concerned? 25, 30, 40, 50%? Around 50%. So you have a project that has 50% investor. Are you going to bring a buyer into that project that wants to get financing? Probably not, right? For many years, Fannie and Freddie has lifted the investor concentration cap, which means if your buyer is an owner-occupied or a second home buyer, they don't care how many investors are in that project. There is no limitation. But the number one reason that we see loans being denied across the country, the number one reason is by lender-imposed rules, where specific lenders will not lend in projects if there's more than 50%. Did you all know that? Did you know that lenders can take agency guidelines, add their own guidelines on top of it, more restrictive, and deem a project as non-warrantable? Fannie Freddie lenders can have more restrictive guidelines. We call that overlays. But that's a huge problem because your buyers that are coming to you from out of state or elsewhere with their own lender, their Fannie Freddie lenders may have these special rules.
Well, and usually, unfortunately, the lender or loan officer says, oh, I didn't know that, or they're dead set that this is what the guidelines are, and that's when we can utilize our rescue loan route, where we've been able to rescue condo loans that others said the project wasn't warrantable or approved, and we've been able to get it approved.
Exactly. And last year was a big year for Fannie and Freddie changes, because if your borrower is an actual investor and they want to buy a condominium for investment purposes and you're already at the 50% threshold, as long as you utilize limited review, both Fannie and Freddie will lift the investor cap for you. So we can now do investment purchases in projects where there's already 50% or more investor, as long as they're going through limited review.
So since we're on this, limited review versus full review, please share the difference and then the real value of a limited review.
The value of limited review. First of all, in condo world, we have two types of projects. We have new projects and we have established projects. Established projects are the most prevalent. Established projects are projects where there's no construction going on, all the units, all the common elements are completed. You had the statutory conveyances, 90% is what the old rule was. It's now been reduced to 80% by Fannie, 75% by Freddie, and control of the HOA is transferred over to the unit owners. Project is completed, conveyances have been met, and the unit owners are in control. That's an established project. Established project, we can do limited review. Okay, limited review means you're putting extra money down. Instead of 10% down for a second home, you're putting 30% down. Okay, you're putting 30% down. We now offer limited review for investors, which means we can now finance investors with limited review, and there's no cap to the number of investors already in that project. Full review is required for new projects, but in the state of Florida, we have to send all new projects to Fannie Mae regardless, unless we're dealing with FHA or VA.
So if an agent is talking with their seller up front and they want to maybe go, or they're thinking that the buyer pool might be more higher financing, what should they ask for if they think a full review is needed? Or what should they bring to us?
Full review can be used for new projects, also established projects. If the project is eligible for full review, we can do high loan-to-value lending. Owner occupancy, 3% down. Second vacation home, 10% down. Okay? Investment financing, as little as 15% down with full review.
Well, what should they ask for in terms of a document perspective, or start to get prepared so we can run?
Well, what we need to review is simply the questionnaire, budget, and insurance. Okay? If you have that, great. If you don't have it, we're not going to ask you to track down those documents. Just reach out to our team, give us the name of the project, the address, and the HOA point of contact, because we have over 2,000 projects already in our database in the state of Florida. Last year, both Fannie and Freddie set up a reciprocity arrangement with FHA. So if the project is one of the 250 that are already on the FHA list that's approved directly by HUD, we can now do conventional financing. Owner occupied, second, and investor. Did you all know that? Has any other lender told you that? If the project's on the FHA list, you can now do conventional financing without having to charge your borrowers for condo docs or waiting to see if the project's approved. That's been out for almost a year now. And it's saving a lot of deals. It's reducing the time to get the contract from listing to sale, and also to get it to closing. It's compressing that time frame, which is something that we see as a problem here in Florida. Instead of having to wait 2.5 months to get a listing to closing, in many markets we're able to do that in 30 days or less. Just imagine how much more business you can do by knowing upfront if the project is eligible for financing.
Well, and sharing that with your seller on your listing presentation, right? That you have those options. The pizza smells good already. You can see it with a nice water view behind it. So thanks for sharing that. Real fast on occupancy, going back, FHA, VA changes. What is the improvements from an occupancy perspective? What is seen as a primary residence, whereas before it was a hard and fast rule, this is a primary residence?
Absolutely. FHA eliminated second homes altogether out of their definitions. So according to FHA, you're either owner-occupied or you're an investor. And they changed the definition. FHA's definition of owner-occupied is the intention to occupy the unit as your place of abode and rent it for less than the majority of the year. Renting it less than the majority of the year. So as long as you're going to occupy it for any specified period, but rent it for less than the majority, that's considered owner-occupied, which is helping us hit those concentration numbers.
I mean, that's huge. Really valuable for millennials, right? Like a lot of the millennials, they want to buy something that they can rent out, or I mean, I have friends that use Airbnb when they go out of town. Like they know they're going on a 4-day trip, they're going to Airbnb their place. So you can have that conversation with them. It's still a primary residence, and I mean, I don't know of anyone else talking about that. It's a great talking point just from adding your expertise and knowledge of financing and how you can help them find the best home at the best price with the best product and pricing. So,
yeah, and great point about Airbnb. Who here finances resort-style condos or condos that can be rented out on a daily basis? Very few. Okay, is that because the condominium doc's restricted, or there's just not much of a market?
A lot of the condo docks are restricted.
Okay.
yeah, I think Indian Rocks Beach is probably one of the few cities that allows more of the short-term rentals, but they do allow it.
Yeah. Who'd be surprised if I told you VA has no restriction on daily rentals? VA has absolutely no restriction on daily rentals. Fannie and Freddie have no restriction on daily rentals. The only agency that has restrictions is HUD, because they defined transient as being rented for under 30 days. But none of the other agencies have defined transient, and all the other agencies allow daily rentals. Good information?
If you want to impress a mortgage lender, share that with them. I mean, that's a good pro tip for the day. Not many people know that. So thanks for sharing that, Sam. Next, let's look at, so we went through full review, limited review. That's really important and valuable. Real fast, can we look into jumbo financing and how does that work? What's needed to be able to originate a jumbo loan?
And that's a great question, because a lot of the projects that we see consist of various price points. It could be because of the size of the unit or the view of the unit. Most jumbo lenders require that the project meet Fannie Mae guidelines. So if we tell you up front that the project is warrantable for Fannie Mae, odds are we're going to be able to do jumbo financing in that. See, all condos fit into 4 special buckets. One, it's either eligible for full review, which is high LTV lending, full review, but there may be a one-off. There may be a commercial component that's over 35%, or a single entity that owns more than 20%, or maybe dues delinquencies that are over 15%. There may be a one-off. So we have the ability to go to the agencies and request waivers. So second categories are eligible with full review but require a waiver. Third category are projects that have one-offs concerning budgets and fidelity insurance. So if you have a project that has no reserves or high dues delinquencies or lacks fidelity, then we can go limited review, because that's what the relief is for limited review. And then you have truly non-warrantable projects, projects that are not eligible for agency financing, and jumbos are one of them. Jumbo products are there for projects that are above the Fannie Mae limits, okay, Freddie Mac limits.
Yep.
Now, on that same line, there's a big change coming out in January called Blue Water. Have you all heard about that? Blue Water? Okay, big change. And it's important for Florida because of that question. You have a lot of condos that exceed the county limits, okay? And you have the 3rd largest veteran population. Basically, what Blue Water is going to do is eliminate the VA county cap, okay? So now, I can come down to Florida, buy a condo as my primary residence, $1 million condo, there's a lot of baby boomers that are $1 million plus buyers, and not have to put any money down. Did y'all know that? That's huge. The other thing is, there's no mortgage insurance, but there is VA funding fees that are required on VA loans, and they can be quite expensive. VA for years have waived the funding fee if the veteran has 10% or more service-connected disability. Well, I'm sure you're familiar with that piece, right? They've added one additional category to that: Purple Heart recipients. If you're dealing with a veteran that received a Purple Heart, but they're not disabled and they're not receiving VA disability, but they earned a Purple Heart, come January, they're also exempt from the VA funding fee. huge. No mortgage insurance, no VA funding fee, no down payment. All fixed rate VA loans are assumable too. So when the veteran decides to sell the unit, the borrower, who does not have to be a veteran, can assume the balance of the loan and the interest. Big changes.
But I don't know if anyone caught, right? So for a VA loan, you can now go up to $3 million and have 100% financing, assuming the borrower qualifies, which is amazing. There's not a product out there like that. So, and we're working right through these, by the way. So if we talk a little bit about our 671 process, which is what Movement's known for, truly having a mortgage-backed approval prior to contract, which is how we get into a position to be able to have a 6-hour underwrite up front, 7 days of processing, 1 day closing time frame, with the whole time frame being 8 days. Condos can take longer than that, but how is your department getting a step ahead?
I said earlier, we could render a decision within 24 to 48 hours of receipt of the condo docs, okay, which is true. Our biggest challenge is getting the condo docs, dealing with management companies, HOAs, okay? And right now, they're bombarded because of all the refinances that are going on. But my team is really in the condo data gathering team, where we gather data, we validate data, we analyze the data and decision it, and then we store it. It has a shelf life. What we do to get ahead of the curve is when we're working with a buyer, and how many of you are buyer's agents? Okay? Working with a buyer. You have a buyer, you get them pre-qualified or pre-approved, right? Who's going to take a buyer out without making sure that they're qualified, right? Once you have a buyer that's qualified and they tell you that they're interested in a condo, reach out to our team when you're making that listing appointment. Let us know the name of the project, the address, and the HOA contact at that time. We're going to check our database. We have close to 2,000 projects in our database. We're going to check the FHA database to see if it's already approved. And if we have it approved, we're going to give you a letter for your borrower that states we have that project eligible for financing. If we don't have that project on our list, we're going to reach out to the management company and HOA, and we're going to get that data. Who knows what it takes to get data from a management company?
Patience.
Oh my God.
Effort.
Yeah.
Patience, effort,
Diligence.
and money, right?
Yeah.
Well, that's how committed Movement is to the condo space. Our goal is to be the #1 condo lender in all the markets we do business in. And we're going to invest in those docs. We want to know up front if that project is eligible for the same type of financing that your borrower is eligible. We don't want to have your borrower spend a lot of time and money. We don't want your borrowers to have to pay for an appraisal or credit report fee or property inspection fee. We don't want your seller to have to take the unit off the market for weeks at a time while other lenders are trying to decide if they want to lend in that project or not. That's what we do. And we call that process Condo Express. When I started 7 years ago, we were doing $2 to $3 million a month in condos. We're now doing over $100 million a month in just 7 years, just in condos. Because we understand the process, we have the infrastructure, and we're in constant contact with the agencies to make sure that we can understand what the guidance are and what the changes are to help do more condo financing.
And I feel like we're paying it forward, right? So we're
We are.
investing in the markets to earn and get these approvals to make the process easier for everyone else as well.
Because once we get a project approved, it's good for 12 months. Okay? That means if you're on the listing side and you want to farm that project, you can market that unit as being eligible for financing through Movement. If you're working with other buyers that want to buy in that project, as long as they come through Movement, they save time and money. Okay? We take the uncertainty out of the equation. Our approvals are exclusive to Movement. And as I said before, Fannie Mae only has 128 approved projects in the state of Florida. Freddie Mac has none. They leave the decisions up to the individual lenders, and other lenders can have additional guidelines more restrictive than Fannie and Freddie.
Brandon.
So can you dive deeper in kind of the difference of what movement is as far as like the three different types of mortgage companies or?
In every marketplace, there's three types of lenders. You got mortgage brokers, you've got correspondent lenders, and you have seller servicers. Three types of lenders. Your lenders usually don't tell you what they are, but it's good to ask. Mortgage brokers really have no control over the process. They're facilitators. They work with a buyer, they work with multiple lenders, and if they're able to match a buyer with a lender together and the deal closes, they get paid a fee. They have absolutely no control over the process or the underwriting. The second category, probably the largest category that we see in every marketplace, are correspondent lenders. And they're called correspondent lenders because they're sponsored. They're sponsored by larger lenders. Chase, Wells, B of A, SunTrust. They are sponsored by larger lenders, and as a result, they have to underwrite their loans based upon the guidance provided by their sponsors. They just can't go to Fannie or Freddie and look at their guidelines. They have to go to the guidelines provided by their sponsor. And for those of you that have never been to the Fannie or Freddie website, fanniemae.com, freddiemac.com, all their guidelines are available. You don't need a login, you don't need a password. You can see what the condominium guides are in black and white, no login, no password. But you could have hundreds of correspondent lenders in the Tampa-St. Pete market, all underwriting to a handful of lenders' guidelines. Then you have lenders like Movement, where we're seller servicers. We deal directly. We don't have any sponsors. We don't have to deal with intermediates, which is why we have the ability to approve projects directly for Fannie and Freddie. And our approvals are exclusive. No other lender can utilize our approvals.
That's great, and more efficiently. So I want to introduce Brandon Kelter. He's out of Palm Harbor. Brandon is an awesome guy. If you get out and have some fun with him, he'll bob his head a little bit like Conan. That's his kind of go-to move. And we have Jason Buchanan's out of Dunedin. Both are born and raised in the area. I'm born and raised in Tampa Bay as well. Actually, Carrollwood, live in St. Pete. And a lot of our other team members that are in the office working hard are from the Tampa Bay area as well. And to us, not that we have to be from here, not that it's needed. We also appreciate that we know where we're at, where we're going, and we can talk at a deeper level on certain markets and areas. So any questions that we can help answer at this point on condo financing, government, VA?
What are your biggest challenges with condos? Let me just throw that out. Anybody have problems with litigation or resort-style condos?
Litigation was a hot topic yesterday, too.
Yeah, litigation is probably our second most common reason that we see loans being denied nationwide. Yeah. And that's because a lot of lenders have a no litigation rule. They will absolutely not lend in a project if there's any type of litigation. And most lenders won't know if there's litigation or not until weeks into the transaction. Am I right? Right? Because that's probably one of the last things that they do on a loan is the project review. And in 2008, they were right because neither Fannie or Freddie allowed litigation. But right now, all agencies allow litigation. The key is what type of litigation? Does the litigation involve health, safety, or habitability issues? Then if it does and those issues are still there, then it's a concern. But the number one type of litigation we see, lenders denying litigation because a unit owner is delinquent on their dues. They're being sued for not paying their dues. Or they're being sued because of they're violating the quiet enjoyment of others. Those are non-issues to the agencies, but issues by the lender, and your deal could be in jeopardy if the buyer is bringing a lender to the table that have these types of rules.
That's great. Thanks for sharing. So we still hear or field calls out there where lenders might say that we can't lend or a lender can't lend in a project due to litigation. So let us know if you come across those. Any other questions or thoughts? Kevin, how we do?
How are you doing?
Yeah, how was it?
I think you're great.
Thank you so much.
It's a little smart for being with me here. But
I hope everyone learned a lot. Sometimes they say it's not what you know, it's who you know. So you guys know you have us in your corner. Give us a call. Brandon, Jason Buchanan, Brooke, Patrick, and there's more on the team as well. We're all here to help and serve you. We love working with people. We love helping people. We're more than just mortgages, just like you all are more than just real estate agents. So let's make sure we're influencing people, going deeper. And thank you for having us.
absolutely.